Hello, everybody. Welcome to Thursday. The S&P 500 was down 3.25% today. Unfortunately, a very familiar pattern. On the day that the Federal Reserve comes out and speaks, the market goes up. And then the next day, after we've had a chance to really digest all of the things that were said, the market comes back down and takes those gains away and then some. And so that's happened again today. And so the main reason that the market seems to be falling is just this disconnect between what the market sees happening and what the Federal Reserve chairman was talking about yesterday. So, for example, one of the things that he kept mentioning was how strong the economy was, and he's right to a certain degree, but no acknowledgement whatsoever for all the different pieces that have been slowing, which is, I think, a good thing. You need to have some slowing in order to bring down inflation, but he didn't mention them, and we have quite a few. I mean, new home starts permits have dropped, new mortgage applications are at a 22-year low. We just saw retail sales drop a little bit in May. We saw job openings come down a bit in May. We saw the unemployment rate come up off of its bottom, for first-time unemployment claims and those types of things. So there are quite a few different things that are showing some slowing. And then the Federal Reserve kept talking about how strong everything was. And the fear, of course, is that, the Fed might make a policy mistake. That's how the market would look at it. They would say, hey, they're not seeing these things. They might overraise rates and create this recession. There was also some inconsistencies, as I pointed out yesterday, with essentially saying that gas prices weren't something they could control, and then also essentially saying that they were going to raise rates until they could bring down the price of gas. And so they didn't say that exactly, but if you read the between the lines there, that's pretty obvious. And I read that in a whole bunch of articles today also. So I wasn't the only one that saw that inconsistency. And that's a scary concept because the Federal Reserve keeps pushing on, rates on something they can't control. And I think most of us feel like gas prices are still on the rise. And so there's some concern there that the Fed is going to keep chasing this thing that they can't control. So the other thing that I found interesting, and really for the first time, the Federal Reserve chairman was really focused on top line inflation, which includes food and energy. Usually we're talking about core inflation, which does not include food and energy. And if you look at core inflation on a CPI, it peaked out in March, has come down for 2 months. If you look at the producer price index, which just came out on Tuesday, it peaked out in March, has come down for 2 months. If you look at the Federal Reserve's, preferred measure of inflation, which personal consumption expense, PCE, that came down in April. We haven't gotten the May numbers yet, so we'll see what happens there. But all of these are coming down. No acknowledgement yesterday whatsoever about that, just this higher inflation. And the only thing that's really been gaining, over the last 3 months is that top line inflation, which includes gas and food. And of course, lots of talk about Ukraine situation, exaggerating that scenario, which makes sense. But how does the Federal Reserve truly impact that? So the market is worried that the Fed doesn't see what it sees. Now, this can change very rapidly. The next meeting, we can have different conversations and what have you, but that's why the market fell today. I would like to put today's downturn and even this year's downturn a little bit of perspective here. I think it's important. If you needed the money tomorrow, then today was a bad day for you because the market fell. If you need the money even, out of your accounts by the end of the year, today could have been a bad day, and this year has been a bad day. A year for it. I can make a much stronger argument that you shouldn't be in the stock market for those types of short-term goals. So I think that's the big perspective that we always have to keep in front of us, is that we shouldn't be invested in the stock market for short-term goals. It should be for longer-term goals. If we look back for the last 3 to 5 years, there's been some pretty healthy rates of return coming out of the stock market. If we look forward for the next 3 to 5 years, I would expect to see some decent returns in that time frame also. We'll see what happens. But nonetheless, if I'm just focused on kind of day by day here, it can get to be a little bit overwhelming. I do put out this video every day. My objective is not for you to take this and try to trade on it day by day. It is just educational. The more you can learn about how things connect and what the market looks at that's important and what they look at that's not as important, the better you are. And by talking about this each day, I can connect the dots clearly with examples that are happening on that day. But the objective there is to increase the level of education so that when we do look 3 to 5 years ahead, we can say, okay, here's the stats, here's how this stuff usually works, and here's what we want to expect in that time frame. So I do think it's important here to try to keep some perspective. If you have a long enough perspective, you can make an argument that these types of downturns are, maybe opportunity to buy more than to sell in a panic. So just keep looking at the overall picture in these timeframes look a little bit longer term in terms of that goes. So nonetheless, look forward to seeing what's going to happen tomorrow. We do have the leading economic indicator coming out tomorrow. I'll be discussing that on my show, which is from 12:15 to 1 o'clock. You can go to YouTube and see our live stream. Talk Money with Tom is the name of the show. And we'll talk about that index. That's a really important number that'll be coming out. I look forward to seeing what's going to be in there. So talk to you tomorrow. Thank you very much.